President, members of the NEC, elders, distinguished gentlemen. Since President Bola Ahmed Tinubu came into power in 2023, one three-letter word has dominated the airwaves: tax. Some people call him the tax governor of Lagos, and in some quarters he's called the tax president of Nigeria. In 2023, shortly after his inauguration, please, can you put the presentation on the screen?
It's on screen.
Okay, next slide. Okay. He quickly constituted a tax policy, fiscal policy and tax reform committee, and that committee was headed by a gentleman called Mr. Idakpokpo. The committee was charged with the responsibility to design new fiscal policies for the country, propose tax reforms, and of course drive the implementation of the tax reforms. Four bills were sent to the National Assembly in 2024. And I must say that from my 22 years experience of practicing taxation in Nigeria, this is one of the fastest set of legislations that we have passed into law as a country. Some of you will recall that the petroleum industry bill, it took the country 20 years to get that piece of legislation from drafting to becoming an act that was signed by President Buhari on 16th of August 2021. That's how long it took us to to make one piece of legislation. But this is a record that in less than 12 months, the fiscal committee headed by Taiwo Idele was able to bring out 4 bills, and they were signed within a year by President Bola Ahmed Tinubu on the 26th of June 2025. I think that was a record. Please, just have the presentation on the screen permanently. I think the slides are more important. Just leave this on the screen. Thank you. Like I said, the bills were signed into law just last month. One thing to note here is that, yes, the bills are laws now, but the effective date has been set for 1st January 2026. So we have the laws, but they are not effective yet. So what it means is that the current laws remain in force. But on 1st of January 2026, those 4 laws that have been signed will become effective. Next slide. So this is a summary of the 4 laws that have been signed into law. First, we have the Nigerian Tax Act. So basically what that law did is to put together all the different taxing legislations in Nigeria today. For example, the Petroleum Profit Tax Act, the Companies Income Tax Act, the Personal Income Code, the Nigerian Tax Act. The second law that was signed is the Nigerian Tax Administration Act. Basically, that act provides a framework for taxing individuals and companies and administrate tax in Nigeria. It defines the functions of the tax authority, it talks about registration of taxpayers. So basically from 1st January 2026, every individual in Nigeria and every corporate entity is now required to have what we call a tax identification. Today, it's all over the place. Some of you are used to TIN, tax identification number. So we don't know what nomenclature is going to be, but what's in the law today is a tax ID. And some states all have different, ways of identifying taxpayers. I know in Lagos State it is called taxpayer ID. In Rivers State it is called RIFTIN. In Abuja, FCTIRS is called TIN. But all this is expected to be consolidated to a single, database of tax identification for Nigerians and anybody doing business in Nigeria. So that law takes care of that. Of course, it also talks about tax filing, assessment, collection, audit. One thing I want to emphasize here, which is very important to all of us. So the new law has what we call VAT fiscalization and electronic invoicing. Nigeria is going digital in the area of tax administration. What it means is that everything is going to pass through an e-invoicing solution that will be implemented by the Nigeria Revenue Service. I mean, it used to be called FRS, but it's now called Nigeria Revenue Service, NRS. So every business owner, every company you will be required to sign up onto this electronic invoicing platform, meaning you are not going to be issuing paper invoices again, you are not going to be issuing PDF invoices again. The government solution is where everybody is going to log on to and do your invoicing. The idea is that the government wants to track every single transaction and ensure that the right taxes are paid as agreed due. So please, let's take note of this. In fact, throughout this presentation, I'm going to be dropping tips. I'm going to be telling you what we change, how it will affect you as an individual, how it will affect your companies and your businesses, so that you're not taken unawares or you're not taken by surprise. So please, let's note that VAT fiscalization and electronic invoicing. So talk to your accountant and talk to your tax teams or your tax consultant. This is coming. In fact, the pilot phase is starting July, August. Though they are starting with big companies with turnover or revenue above 4 billion naira, but it's going to trickle down everybody. Even international companies doing business in Nigeria must connect to this platform. It's similar to what they do in Rwanda, it's implemented in Egypt, I think there's something in Ethiopia. So we are just catching up actually. Of course, it's something that has been in Europe and Americas all the while. So the Nigeria Revenue Service Establishment Act is basically to replace the FRS. Today we know the Federal Revenue Service, but like I said, it's now called the Nigeria Revenue Service, of course, effective January 1, 2026. One of the key changes that come with that reform is that the government now wants to have the Nigeria Revenue Service as a single revenue collector. So customs will no longer be collecting revenue. NIMASA is no longer be collecting revenue for the government. NPA, if any revenue collecting agency, parastatal, and department of government today, those functions will now be moved to the Nigeria Revenue Service. So clearing your car, yes, you get assessment from the custom, but the payment, you have to make it through the Nigeria Revenue Service. So we will now have a single revenue collector for the country. Then we're going to have, so today what is called the Joint Tax Board is going to transform to the Joint Revenue Board. So basically the same thing, but one addition that is brought into their functions is that the Office of the Tax Ombudsman has been created. Who is a tax ombudsman? The tax ombudsman is somebody who is a moral police for the people. So if you feel wrongly assessed by the revenue service, you feel some fiscal injustice, and you don't have money to hire people like SCA, Papa Vigi, there is the Office of the Tax Ombudsman that will defend you. So basically, a moral police against the taxman on behalf of the people. Next slide, please. So now, how does it impact you as an individual? So I'll talk about the impact on the individuals, before I go to the company. The first thing is that today, for some of us who are in paid employment, in computing your personal income tax, or what we call PE, the current law gives you some reliefs and allowances. It is called consolidated relief allowance, and it is 21% of your gross earning, of your total income. That has been taken away. That has been taken away. So you no longer have reliefs in the tax law. Remember, that relief was a consolidation of your children allowance, your wife, dependent relative allowance, 20% personal allowance, etc. It was consolidated as 21%, but today it's gone. In lieu, the new law gives, a rent relief allowance, but it's peanuts. It's 500,000 naira per annum, or 20% of the rent you have paid, which is peanuts. So I think the idea here is a trick, and this is a trick I'm going to say to you. The taxman wants to know who your landlord is. So if you own property here, if you own rental property here, your tenants now will be disclosing your rental income to the taxman. Wow. Today I can say most of us, we have properties, we just collect rent, and for quick back. Nobody thinks about paying tax on it. But the taxman is putting together data-driven tax administration. So your tenants will be disclosing, without your knowledge, your rental income to the tax authorities, because they want to get a 500,000 naira annual relief. Because what the relief does to your tenant is that it reduces his tax payable. So don't be surprised if you start getting assessment from the taxman and he's quoting the address of your property and the amount of rent you earned and asking you to pay tax thereon. So that's one way it's going to affect us. Now, benefit in kind has been brought to the fore. It's in the current laws, but administering it has been a bit not effective. So what the law requires now is that taxpayers will now declare in your annual tax filing any benefit in kind you may have enjoyed from your employer. So if you have status card or your employer provides you accommodation, you are expected to declare the value of that benefit you enjoy in your tax returns and pay tax on it. So please, let's take note of this. But there are some good things. If you dispose of your personal chattels, your personal property below the value of 5 million naira, it is tax exempt. So you have a gold wristwatch, you sell it for 3 million, you are not expected to pay tax. The individuals receiving compensation or damages of up to 50 million for personal injuries during the course of employment, that is exempted from capital gains tax. Then if you sell your personal house where you dwell, because today, in the current laws, if you dispose of any real estate, you are expected to actually pay capital gains tax. Some of us don't pay, but recall that, at least for Lagos State, at the point of going to process governor's consent, they will give you a nice paper called assessment, and you see capital gains tax there. But what the law has done today is that if you dispose of your personal house where you dwell, that transaction is exempt from capital gains tax. But guess what? It only gives you that exemption once in a lifetime. So you can't be buying house, sell, buy house, and you think you get the exemption. So you only have that exemption once in a lifetime. I've talked about Office of the Tax Ombudsman. So pensions, gratuities, and end of service benefits are exempt from tax. So please don't let your employer deceive you. If you earn any pension, gratuity, or end of service benefit, it is tax exempt. One thing I must say here quickly is that today, banks, insurance companies, and stockbrokers, the law has mandated them that any transaction you carry out in your bank account within a month above 25 million naira, they are now mandated by law to report that transaction to the tax authorities. Today, we have a similar thing in the banking industry where you do some transaction above 2 million for individuals. Banks are required to report such transactions to the NFIU and the EFCC. But now, if you go to the bank and do a transfer of 25 million naira and above in any month, that bank or your stockbroker or your insurance company will notify the tax authority. What does it do to the tax authority? They send you a nice letter to say, please show that on this transaction, adequate taxes have been paid. So there's a lot of data mining that's going to be going on. So please, let's be careful. Because Nigeria is catching up with the rest of the world in terms of tax administration. And the law has introduced what we call presumptive tax regime. During the last election, a lot of people were surprised. Why did Atiku declare a tax clearance certificate of 10 million naira? So the law now gives the tax authorities the power to look at you, look at your lifestyle. You go with a convoy of 5 cars and assume a presumptive income and issue you an assessment to pay. Because the tax authority now has the power to presume your level of income and charge you to tax. So it is now left for you to defend yourself to say, I do not earn this level of income. So it's going to be an interesting few years starting from 2026 in Nigeria. Next slide, please. Okay, so these are some good news. I'm not only telling you the downsides of the law. These are some good news. In terms of VAT, we have an array of exemptions, things that are not liable to VAT. So please pay attention if you're a businessman and entrepreneur. These items listed here, you are not expected to charge VAT. You are not expected to pay VAT on them. First are basic food items. I mean, I don't think I need to define what basic food items are exempt from tax. In fact, their rate is 0. You don't pay VAT on them. Medical equipment. I know we have a lot of business owners here in the medical field, pharmacy, hospitals. So medical equipment, you pay 0 rates of VAT. What that means is that the difference between 0 rate and exempt is that when you buy medical equipment and you charge VAT at 0 rate, you are able to claim any input VAT you may have incurred in other aspects of your business against that zero rate. Simply put, you are entitled to a refund from the government. So please note this and let your accountant know. I've talked about medical equipment. Educational books and materials are charged to VAT at zero rate. So no VAT on educational books and materials. Locally produced agricultural products, animal feed, medical services, so not just the equipment, even the medical services, consultation by doctors, specialists are taxed at zero rate. Then live cattle, goats, so the headmen, when you sell your cattle or goats, you are not expected to pay VAT or collect VAT on it. Then those that are on the VAT exempt list, baby product is VAT exempt, meaning it's outside the purview of VAT. Locally manufactured sanitary wares, pads, or tampons. So these items I'm listing, for some of you that are thinking of going into business entrepreneurship, consider some of these sectors, because it means your compliance and the taxes you're expected to pay are either zero or very minimal or completely exempt. For example, I have a small business that my wife runs. I carefully selected a product that is VAT exempt, so I don't pay VAT on those products. So it helps and it increases your return on investment. Land building and interest in land or building is also VAT exempt. So paying rent, there is no VAT on rent. Selling real estate, land, building, there is no VAT. Don't let your landlord deceive you. So when you receive an invoice from your landlord for rent or anything related to land, building, and interest thereof, and you see VAT, please contest it. Please contest it. So whether it's residential rent or commercial rent, it doesn't matter. The law exempts anything around land, building, and interest in them thereof from VAT. Of course, bonds, government securities are also exempt. So if you look at the third box to your right, you see some nice two tables there. They are basically the personal income tax table, the tax rate tables. So today, under the PSUN scheme, our income is taxed from 7% to 24% today. That's the current law, the Personal Income Tax Amendment Act 2021. And those are the tables, first 300,000, 7%, up to above 3.2 million, 24%. But the table below is the new tax table that will become effective 1st January 2026. Let me not bore you with the rates. How does it impact us? Next slide, please. So please take a look at this table. The first column there is your annual income, so from 5 million to 1 billion. So look at the table and determine where your annual income falls. And you see the current tax rate you pay. So this is the effective tax rate. The third column is the effective tax rate you will start to pay from January 1st, 2026. And the last column tells you whether you are going to pay more tax or whether your tax has reduced. So basically, I think 17.4 million is the equilibrium point. So if you earn 17 million and below today per annum in Nigeria from 1st January 2026, the tax you will pay will reduce. So that's why you hear the government kept on saying, this law is for the poor man, it gives a lot of relief to poor people. So basically, if your employment income or your business income as an individual or a sole proprietor is 17 million and below per annum, you pay reduced tax. And those are the percentage reductions. But if you earn 17 million and above, you are going to pay more tax. That's just what this table is saying. It's as simple as that. So for example, if we take somebody who is earning 300 million naira and above, today his effective tax rate is 18.89. From January 2026, it's going to be 24.31. That's a 5.42% increase. For some people, it's significant. Next slide, please. Now, I've talked about individuals a lot. How does this new tax law affect companies? And my focus here is on small companies. Because whether the big companies like it or not, there's nowhere to hide. The government is coming for them, and they're going to pay more tax. I think I'll just speak through the important aspects. So remember what I said about individual transaction above 25 million per month, and the processing institution, whether bank, any financial institution, is required to alert the taxman. Same thing for companies. So please, let's pay attention. So if you have a company and you do any transaction of 100 million naira and above in any month, the bank, stockbroker, or the insurance company is also mandated by law to declare that transaction, report that transaction to the tax authority. So 25 million for individuals, 100 million for companies. So please know how you move money around now in Nigeria. Everything is being tracked. So income tax rates for corporate income tax rates remain unchanged: 80% CIT, 85% PPT, and 50% PPT for PSCs. What is interesting here is that for small companies who make turnover or revenue of not more than 50 million per annum, you are exempt from tax. You pay 0 tax. So if you have a small business, a company, and your annual turnover or annual revenue or annual income is not more than 50 million, you pay 0 tax. So this is an advice. So if you have a company and today your annual turnover is about 150 million, 100 million, instead of using one corporate entity, consider registering 2 or 3 companies. Hello? And then try to manage your affairs in such a way that in any of the companies, your revenue is not more than 50 million. And if you're able to do that, you pay 0 company income tax. And that's right there. Also, let's be careful for those of us whose compliance rate is very high. You have a conglomerate or a group of companies and your compliance rate is high. What the law now says is that for you to get tax deduction on your expenses, be they operating expenses or capital expenditure, you must show evidence that you have paid the right amount of VAT and import duties. So basically, the law wants to reward honest businesses. So if you import a piece of equipment to do business, and you go to a customer and you say, okay, I'll give you reduced duty. By the time you are submitting that expense in your tax returns for tax deductibility, the taxman will only give you the value of that equipment as tax deduction that is proportional to the duty you paid. So if you underdeclare, you get underdeduction. So they're trying to encourage people to do the right thing. And if you avoid payment of VAT, you are not going to get a deduction. That's for businesses whose compliance rate is high in any case. So for those that are active in the stock exchange, if you dispose of shares in the stock market and the value of that disposal is less than 100 million, you will be exempt from capital gains tax. So let's go to the next slide, please. So these are just economic development incentives. So what the government is trying to do is to focus on some sectors to encourage investment, and the tax holiday of 3 years, renewable for another 2 years, maximum 5 years is given. I don't want to go, this is very technical, so let me not bore you with this, but if you have questions about which sectors you can get some of these incentives, please reach out to me. I'll point you to the relevant sections of the law. Next slide. I'm almost done, Chairman. Next slide, please. No, next slide. Next. Okay. So let's pay attention. Now, Section 164 of the Nigeria Tax Act is, for me, is the best part of that piece of legislation for me. It gives a comprehensive list of activities, businesses that are tax exempt, meaning if you play in this area, you pay 0 tax. Again, I'm bringing this to you, my brothers, my uncles and elders, for investment purposes. So when you are looking to invest, please pay attention to these last 2 slides. This slide tells you if you play in these sectors, you pay 0 tax, and it is guaranteed by law. Number one is statutory or registered friendly society, churches, mosques, cooperatives, foundations. Once it's statutory, it's registered and it's of a public nature, every financial transaction in that entity is exempt from tax. Okay, I've talked about cooperative, religious, a trade union. So our trade unions, they don't pay tax on the dues and levies they collect. That's given. The state government, federal government don't pay tax. So the first thing that strikes here is that dividend distributed by authorized collective investment scheme. Such dividend is exempt from tax. So if you have a stockbroker, maybe you ask them to say, look, do you have authorized investment scheme by the Nigeria Stock Exchange? Dividend you earn from such scheme is exempt from tax. Now, this is also very important. Dividend or rental income received by real estate investment company on behalf of its shareholders, provided that 75% of the profits is distributed within 12 months from the end of the financial year. So if you have a real estate company and you make profits and you distribute nothing less than 75% of that profit to your shareholders, all that is exempt from tax. So for those of us who are into real estate business, please take note of this. Next slide. Okay, I've talked about pension and gratuity. Another part, this is new, and where is our elder Echeta? Apologies to Echeta. It's not me, it's the law. Wages and salaries of military officers and emolument of any person serving as other rank in combat zone is now exempt from tax. So basically, military officers from 1st January 2026 will stop to pay personal income tax or pay. I wonder why they didn't include the police and civil defense. It's not me. But I think it's a way of encouraging them in the war they are fighting in the Northeast, North Central, and elsewhere. So military personnel are now taken away from the tax bracket. So if you're an angel investor or you're a venture capitalist or a private equity fund, the gains accruing from the disposal of interest in such entities are also exempt from tax. So if you look at number 6, this is also very important. I think it's something we can take advantage of even in our homeland, in Wepawano and Uzanu or Uneme. Income generated by companies engaged in agricultural businesses, including crop production, livestock, aquaculture, forestry, dairy, etc., are exempt from tax. Now you wonder why big politicians always invest in farms. They don't pay tax, and the law backs them. So consider investing in agriculture. If you're a farmer, even if you are making 2 billion, 10 billion, you pay zero tax. Next slide. So if you are into exports, if you're into the export business, so the dividend received from wholly export-oriented businesses is also exempt from tax. So those who are into export, please continue and don't let your accountant deceive you. Any dividend received from such company is exempt from tax. Profits of a company engaged in sporting activities. So if you want to invest in sports promotion, not sports betting, please. Not betting, not Naira bet. It's exempt from tax. So these are other, but I just highlighted the ones I thought would be very useful to us. Next slide. I think this is the end of the presentation. Thank you very much for the time. I don't know if I can take questions.
Please, let's clap for this guy. One good thing about this is that, tax issues are very complicated. But the Victor has been able to break it down so that even we that didn't like